I'm about to share with you right now is a very simple trick that I have been using for a long period of time now, and it has been very helpful and helping me to get good opportunities in the market. And this is simply how to trade market structure in an advanced level. I know you all know about market structure, but this is how to trade it in an advanced level. I'm going to show you how you can trade market structure with other strategies like value gap, your order blocks, your support and resistance level, and every other thing that you know about forex trading, how you can utilize all of them and get an accurate opportunity in the market to go for any particular position. I have used this for a long period of time, and in 90% it is always accurate and it appears all the time. So without wasting much time, if this is your first time of seeing my channel, guys, please like, subscribe, and share this video to reach other forex traders. And also, it is the only way you can help us to grow this channel. So let's get down to the real chart, and I will show you everything the way it is. So the first thing that you need to do is to open any instrument of your choice. For example, in this particular video, we are going to use Australian dollar, US dollar, AUD, USD, and currently we are in 4 hours time frame. Okay? And if you have watched my first video about market structure and how to trade it, you would understand that the best time frame to choose your market structure and to determine the direction of the market is in weekly time frame. So we are going to do our top-down analysis starting from weekly time frame. So let's get down to weekly time frame. So on weekly time frame, let me kind of put it this way. Okay? On weekly time frame, the first thing that you need to do is to mark off all the support and resistance levels in your chart, okay, using a horizontal line. So I have done it here. These are my resistance levels, okay, and these are my support levels. So when you must have marked out all these levels, after marking out all these levels, the next thing is to find out the current direction of the market at this particular time frame. Okay, so if you look at this part of the chart, you will see that the market is currently in an uptrend. Why? Because the market is creating a higher high, higher low, higher high, higher low, higher high. Okay, and if you look at it, the market is respecting all the key zones. Market respected this particular level as a support level, came up here, respected this as a resistance level, returned at this particular point as a support level, and now it's going up again, trading at this particular level. Okay, currently we should be targeting this particular level, or we expect the market to come down or probably break this particular trend line. You don't know, but the current state of the market is an uptrend. That is the first thing you need to know, and it is trading at a key zone. So then the next thing that you need to do, now that you have identified the direction of the market from weekly time frame, the next thing is to go down to daily time frame. So when you come down to daily time frame, what do you see? So in daily time frame, considering from this point up to this point, okay, you can see that the market is still in an uptrend. So you draw that from here to here, the market is still in an uptrend. Okay, so from daily time frame, we confirm that the market is still an uptrend, and we want to know what exactly happened at this point. That's our target. We want to know how we would have entered this particular trade, because market reached this particular resistance level and it returned at this support level. So now that it has returned at this support level and the trend line has confirmed that the market is in an uptrend, how would we have gotten the opportunity to be in this market? That is what we need to find out now. So we go to 4 hours time frame. So when you get down to 4 hours time frame, this is how the chart looks like. And our target is to know what happened here. So I'm going to zoom out a little bit so that it will become clear. Now, look at this particular zone. I want to show you something here. Look at this. Okay, so first market broke structure. Here market broke structure. When market first traded into this particular zone, it came up again, okay, taking out this particular high. So from here, market is in a downtrend, trying to make this particular correction that returned to this point. So when market broke this particular structure, you know that the direction of the market has changed. Okay, now I want you to take a look at this particular bearish candle that formed before this bullish candle formed. Okay, this bearish candle that's formed here before this bullish candle that's created this upward movement is the order block. Okay, so you're expecting the market that when it take out this particular high break of structure, then the next thing you're expecting is for the market to return into this particular order block, or if there is any fair value gap here, okay, before this order block, you'll be expecting the market to return into that particular zone. So what did the market do? Market respected that. So look at this particular order block. Boom. So market returned into it and then started creating higher high, higher low, higher high, higher low, showing that the market is changing structure and the market is in an uptrend. So how many confirmations do you have here for you to enter this market? First, market has changed structure. Second, market is trading at a key zone, which is a support level. And also you have confirmed that the market is in an uptrend. And then the market returned again into this particular fair value gap. There are many conferences here to prove to you that the market is in an uptrend. So you would have gotten a buying opportunity here, taking your profit above the next high, this particular high, and placing your stop loss exactly at this point. Okay, then what else do you see currently in this market? So when the market created this and this, okay, so you have to draw your trend line like this. Draw your trend line like this. So after drawing this trend line like this, what's happened? After market must have taken out this particular high, okay, it returned down here, touched this particular trend line. As you can see, when it touched this particular trend line, it's also a sign that the market wants to continue until it take out this high, because that is your major target, to take out this particular high to create a higher high. Okay, so you have to go bullish again at this point. Maybe you would have entered the market at this point. You would have entered the market at this point. Set your stop loss just here, and set your take profit above here. So this is exactly what you would have done. And then now the market is trading at this particular point at a key zone in the market. But look closely into this particular into the state of this particular market at this point. You will agree with me that the market is ranging. Yes, that is exactly what the market is doing. The market is currently ranging at a key zone. At a key zone, the market is currently ranging. So what do you expect from this particular market? There is only two things that you should expect at this point in this particular market. And that is, first one, it is either that this market break this structure downwards, return and retest this particular trend line, and then comes down to this particular trend line, okay, the trend line from daily time frame, and then create something like this and continue going up to take out this particular high. Or you expect the market to first of all go up, break this particular structure, okay, return on it in form of retest, and then keep going up. Okay, this is exactly what you should expect from the market until it hits the next level. So this is how you use market structure in support or in combination with order block, fair value gap, break of structure, and other strategies to find out opportunity in the market. So knowing the market structure is very important, because this will help you. Because let's say, for instance, currently the market is ranging here. Now that you know that the market is ranging here, you shouldn't be so inquisitive to enter a buy or to enter a sell. You have to wait for the market to give you a sign, a signal that, okay, I want to continue going up, or no, I want to go down first at this point. Then you wait for it to create a structure that will show you that the market wants to continue going up, just as we did here. So when you trade this way, I promise you, you will have less losses and your win to lose ratio will increase. So I hope this video was very useful. I want you to apply this in your trading. Just go to your TradeView or any platform you are using. Try this. If you have any challenges about it, just come to the comment section and write it, or tell me anything that you wish me to do a video on. Okay, if there's any challenge you have while trying to do this, just write it in the comment section. I will respond to everything. If you want me to do a video again about anything, just write it and I will do such video to help you improve. Provided that you are following this channel, I promise you, your trading history will change. So, having seen everything that I have shown you in this particular video, if you find it very helpful, please hit the like button and also subscribe to the channel. And secondly, if you don't know anything about market structures, you don't need to be scared. I have a video about it. This video here, you go and watch it, and I promise you will understand more about market structure and how to deal with it in the market. A lot of things will change in your trading history. So see you in the next one, and remain profitable.